Happy Monday, everybody. I hope you had a great weekend. There's a lot to cover today, so let's jump right in. Today is March 3rd, 2025, and this is your Monday market update. As we do this time each week, let's recap what happened in the markets last week, and then we'll preview. This is getting harder every day, but we're going to preview what this week's going to hold. I'll try to give you the lineup for this week, but as we've come to know, we just don't know. Markets began the week with a mix of dip buying optimism and renewed trade concerns last week before ultimately closing lower after President Trump reaffirmed upcoming tariffs on Canada and Mexico. We'll see how that goes this week. Major indices opened higher as investors attempted to recover from the Friday before that's sharp sell-off. European markets provided some early optimism with strong German business confidence report and Eurozone inflation data coming in as expected. This lack of immediate negative catalysts helped stocks rise into the late morning. The rally did lose momentum as a strong two-year Treasury auction signaled investor demand for safety, reflecting lingering economic worries. A late session decline in Treasury yields did raise concerns that markets were positioning defensively ahead of key economic data later this week. Now, recall that we may be revisiting Bizarro World. We've been here before. You know that place. Good news is bad news, and bad news is good news. Just last week, we saw that Treasury yields went up over 4.5% on the 10-year, and it was a headwind on stocks. So now yields are going down. We're worried about growth. Confusing? Yes, it is. The final sell-off came after President Trump, following a meeting with French President Macron, stated that tariffs on Canada and Mexico were on schedule and progressing rapidly. Markets reacted negatively, with major indices dropping into the close. Defensive sectors did outperform as investors looked for some stability. Healthcare was up, consumer staples were up, real estate was up. Technology and growth stocks struggled, with the NASDAQ selling off as investors took profits ahead of NVIDIA's earnings report later in the week. The Dow was up just a bit, S&P down 0.5%, the NASDAQ down 1.25%. On Tuesday, markets remained volatile as fresh trade war uncertainties and weak consumer data fueled economic concerns. Stocks opened flat to slightly negative as investors weighed rising home prices from December, which added to concerns about inflation staying elevated. The mood worsened after consumer confidence data for February plunged to 98.3 versus 103 was expected, marking the sharpest drop since August of 2021. This fueled fears of weakening consumer and broader economic slowdown. Markets did turn lower after the S&P broke down below that 5,900 level, a key technical support. In the afternoon, stocks stabilized slightly after Fed head Barkin hinted that upcoming inflation data, that core CPE, might show a decline, easing fears of prolonged higher interest rates. Does anyone else see that as weird, that he's now thinking he knows what that number will be? Just don't know about that. With strong Treasury auction also helped limit losses. The Dow up 1/3 of 1%, S&P down 1/2 of 1%, and the NASDAQ was down another 1%. Excuse me, otherwise known as Wednesday, was otherwise known as NVIDIA earnings day, brought a volatile session as we saw early AI-driven gains fizzle out as trade worries surfaced, excuse me, with NVIDIA earnings looming after the close. The morning session, stocks opened higher, fueled by news that China's DeepSeek AI model was accessible again, renewing optimism about AI-driven growth stocks. Now this caused a rally in mega cap tech stocks. Again, Bizarro World. Wasn't it DeepSeek that started the air coming out of this trade? The market lost steam midday after a weaker than expected new home sales report, rekindling economic slowdown fears. Note, growth scare, as I've been talking about. The major indices turned lower when President Trump, in the televised cabinet meeting, reaffirmed plans for new tariffs on Canada, Mexico, additional global partners. This led to a broad-based sell-off. Stocks did bounce off the day's lows late in the day as investors braced for NVIDIA's earnings report, which was seen as a major catalyst for the market's next move. Dow closed down 0.5 of 1%, S&P up ever so slightly, literally 1/10 of 1%, and the NASDAQ was in the green, if even just a bit, less than 1/4 of 1%. Markets sold off sharply on Thursday, with mega cap tech leading the decline as NVIDIA's post-earnings rally reversed quickly. As we opened the morning session, NVIDIA initially jumped after reporting better than expected Q4 earnings and revenue, but investors grew cautious as forward guidance did not exceed the highest expectations. The stock gave up pre-market gains within 15 minutes after the open, sparking broad-based tech selling. Just a Bizarro World note. If you read what the concern was about NVIDIA, the growth that has been over the moon was still over the moon, but maybe just the angle was a bit different, a lower orbit. It was clearly the algos and the markets looking for something negative. As midday arrived, the decline accelerated as durable goods orders came in at 3.1% versus 1.9% expected, raising concerns that inflation remains too hot for the Fed to ease policy anytime soon. Again, back and forth on this. In the afternoon, the final sell-off came as Cleveland Fed head Hammack stated that current policy may not be meaningfully restrictive. That was the words he used, which was seen as a signal that rate cuts may be further away than markets had hoped. By the close, the major indices were at or near their session lows. The Dow was down 0.5%, the S&P 500 down 1.2%, and the Nasdaq was down over 2%. Markets opened near the flat line on Friday, and light was seen at the end of Nvidia selling tunnel. Early in the day, there was a rebound underway in the risk-on stocks, primarily the Mag 7. There was quiet action for most of the day until the quiet was broken, literally, in the Oval Office when President Trump, Vice President Vance, and Ukrainian President Zelensky got into a dust-up, if you want to use this soft, non-committal word. Excuse me. For those that have seen it, you know, unbelievable. As President Trump ended the event, this is going to be great television. That was his line. The markets did turn negative for a bit as markets had begun to price in peace, but geopolitical risk did come back strong. But back to bizarro world, markets actually went up into the close. There were some technical reasons, but still Trump's comments about Ukraine risking World War III and markets going up, go figure. By the end of the day, the Dow was up 1.33%, S&P up 1.23%, and the Nasdaq was up 1.23% as well. Friday's closing rally was not enough to keep the week from being ugly. For the week, the Dow actually made it positive 1%. Think of course, the defensive stocks. S&P was down 1% on the week, and the Nasdaq was down 3.5% on the week. As we wrapped up February, the Dow was down 1.5% on the month, S&P down 1.5% on the month, and the Nasdaq was down almost 4%. Again, on the month. So what do we expect from the markets this week? If you thought it was slowing down, keep hoping. There will be a lot of focal points this week. The shiny object will be the president, who will address a joint session of Congress on Tuesday. But there's a lot of eco data, the monthly jobs report, retailers' earnings, and we'll even get some Fed heads. For the Fed, we'll start with that. Musalem, Williams, Harker, Waller, Bostic, Bowman, Kugler, and even Powell. I'm telling you, I may just have to make a bingo game out of this. Jobs will be big all week as we get the first week of every month. ADP, jobless, and non-farm payrolls all this week. The eco data and the retailers like Costco and Target will give us a read on that growth scare question. We will see who and what gets the oxygen in the room here. There's a lot of competition. Just a few quick takeaways from last week as we move into this week. Trade war fears did resurface. Trump's tariff threats on Canada, Mexico, and China continue to pressure markets. The economic data raised concerns. Consumer confidence plunge. Hot durable goods data suggested sticky inflation. Finally, Nvidia earnings failed to sustain a rally. While results did beat estimates, they didn't spark broad tech optimism, leading to sector-wide selling. Now, the Fed does remain a wild card. Hawkish comments from Fed officials suggested rate cuts may be further away than markets were expecting. For now, please, I urge you, stay focused on the signal, not the noise. Get a plan, stick to it. Every day I'm talking to you about risk audits. Are you in the right place for risk in these markets? And keeping your investments in line with your plans. Keep in touch. Come back on Friday for some more planning ideas. We head into the last week of the first quarter, the first week of the first quarter. Now, the last month of the first quarter also. Let's put all that together. That's the first week of the last month of the first quarter. Sorry about that. Wow. Have a great week. We'll talk to you soon.